Now, Israel's central bank, it chose not to cut interest rates to address rising inflation expectations caused by the ongoing war in Gaza and the accompanying increase in defense spending. The Bank of Israel left its key rate at 4.5% for the second consecutive meeting to protect the shekel. The currency extended its gains against the dollar after this decision. Marking its best daily performance this year, the shekel reversed all the losses it suffered last week when Iran's threat to retaliate against Israel for a deadly missile strike on one of Tehran's embassy buildings in Syria unnerved markets. Israeli assets rallied on Monday in part because of optimism over a potential ceasefire deal with Hamas that would involve the release of Israeli hostages and Palestinian prisoners. Now, the central bank is worried about the uncertainty over the war in Gaza will end and how tensions with Iran and its main proxy group, Lebanon-based Hezbollah, are worsening. Now, this comes even as inflation, it's eased to 2.5% year-on-year within the central bank's target range that was of 1% to 3%. Israel's central bank is also concerned about increased defense spending and government borrowing to fund the conflict. The government faces a fiscal shortfall of this year of about 6.6% of the GDP, which would be one of the widest gaps for Israel this century. Now, the increase in spending is contributed to a rise in inflation expectations in recent months. For latest news, download the WION app and subscribe to our YouTube channel.